Hello everyone, and thank you for joining us here at xm.com. You are watching the weekly technical outlook video. I'm Christina Barthanilu, investment analyst, and at this video I'll share my view on dollar yen, euro dollar, and gold following a busy week of central bank meetings. Well, the week ahead is expected to be light in terms of data releases, as the US and other European markets will be closed for the Easter holiday. However, there are some important data releases in the US. Specifically, investors will be eagerly waiting for the core PCE inflation index due this Friday, while a couple of Fed speakers, including Fed Chairman Jay Powell, might also create some volatility in the US dollar, therefore affecting euro dollar and gold as well. Starting first with dollar yen. And the core PCE inflation index expectations are for the index to remain steady in February. Investors will be looking whether there is any deviation from forecasts, and therefore, if there is, that could provide more insight about whether the Fed will cut interest rates as soon as June, after the central bank kept its rate projection steady at 3 rate cuts for 2024. So if the data come weaker than expected, while increasing the risk for a rate cut in June, that could add some pressure on the US dollar, which is currently trading sideways, just around this ascending trend line at 151.33. The pair managed to stay above the 151 level despite the Bank of Japan exiting negative interest rates. So that's increasing. That is somewhat questioning whether the pair will. That is somewhat making interesting to see whether the pair will extend this rebound in the coming sessions. However, looking at the technical indicators, the RSI, the stochastic oscillator over here, seem to be weakening after reaching their overbought level, so that is somewhat increasing the risk for some stability or downside correction. Nevertheless, traders may not get disappointed as long as the pair holds above the 150.87 number, where that is the high from February. So a break below the pair's previous high could disappoint some traders, likely causing a new decline towards the 20 and 50-day moving averages, which are currently converging towards the 149.40 level. That is where the 78.6% Fibonacci retracement of this downtrend over here is placed. Below that, the focus might next turn to these support trend lines in around 148.10. Now, if the pair were to resume its uptrend above the 151.93 level, that is the high taken from 2022, then we may see another impressive rally towards the 153.50, 153.80 former constraining zone, while above that the pair might challenge the trend line zone around 154.70. Now turning to euro dollar, there are no major releases coming out from the eurozone. Nevertheless, dollar volatility could still affect this pair, especially as a couple of Fed speakers are expected to make comments on policy later this week, including Jay Powell. So we can see that the pair is currently trying to recoup last week's losses after finding support slightly above the 1.08 number. The pair is also trying to recover some lost ground above its 50 and 200-day moving averages, but I believe that there is still some key resistance ahead. This ascending trend line and the 38.2% Fibonacci retracement of this downtrend over here, which is at the same area around 1.0865, could still block the way up. Then the pair will also have to overcome its 20-day moving average in order to reach another constraining zone between 1.0916 and 1.0945. which coincides with the 50% Fibonacci retracement of the 2021 and 2022 downtrend. So as long as we hold below those levels, there is a risk for a downside correction. Otherwise, if the pair manages to rally above those boundaries, we may see an extension towards the 1.10 level and then perhaps towards the 1.1055 territory. Now in the event in the event the price pulls lower, falling below its simple moving averages again, then it may retest the 1.08 round level where the 23.6% Fibonacci mark is located. Below that, we may see another test, perhaps near February's low of 1.0694, unless the constraining zone of 1.0760 comes to the rescue. If we look at the technical signals, well, we don't have clear signals here, but the downtrend in the RSI is somewhat raising the risk for a downside correction. So there are no bullish signals here yet, and this upturn over here should be treated with some caution. And finally, looking at gold, this is trading bullish today. It's trying to close above last week's barrier of 2,186. So if we close above that boundary today, we may see more gains despite the weakness in the technical indicators over here. So another bullish break could take us back to the 2,222 record high reached last week, while above that the next stop could be near the 261.8% Fibonacci extension of this bearish wave over here, which is at 2,255. Well, the exit from this bullish pennant formation is increasing the risk for a trend continuation higher. However, if the pair fails to close above the 2,186 level, then we may see a pullback down towards the 2,140 and 2,152 territory, where the 161.8% Fibonacci extension and the 20-day exponential moving average are placed. The break below that could then confirm additional losses towards the 2,112 level, while not far below that, the 50-day exponential moving average and this ascending constraining line could be another barrier near 2,095. So that's all for this week's important instruments. Thank you for watching, and see you next week. Bye bye for now.